Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing that might sound a bit dry, but trust me, it has got the heartbeat of a company's latest financial pulse, and we're here to decode it for you. Get ready for some serious shareholder insights disguised as a simple report before we jump in. If you are all about getting the real story behind corporate documents, do us a favor and hit that subscribe button. And hey, we've built a fantastic community on Discord where we break down these filings even further, so check out the link in the description below to join us. Alright, let's get straight to it. We're looking at a current report, a Form 8K from KENNAMETAL Incorporated. Think of this as an immediate update on what is happening with the company, filed on the 4th of February 2026. They're letting us know about their financial results for the second quarter of their fiscal year 2026. Which ended on the 31st of December 2025. Now this isn't a full annual report, but it gives us a crucial snapshot of their performance. Let's quickly look at what kind of securities they have registered. They've got their capital stock with a par value of $1.25 per S-share, traded under the ticker symbol KMT on the New York Stock Exchange. They also have preferred stock purchase rights also on the New York Stock Exchange. This tells us about the basic building blocks of ownership in the company. Under the securities registered pursuant to Section 12B of the Act section, we see a clear listing, their capital stock, with that $1.25 par value, trades on the New York Stock Exchange under KMT. They also have preferred stock purchase rights also listed on the New York Stock Exchange. This is the standard stuff that allows us to track the company's stock performance easily. Now the real meat of this filing, the part we've all been waiting for if you are interested in how KENNAMETAL is actually doing, is under Results of Operations and Financial Condition. They've issued an earnings announcement, and that is what they're sharing with us today, the 4th of February 2026. This announcement covers their fiscal 2026 second quarter, which wrapped up on the 31st of December 2025. This earnings announcement, Exhibit 99.1, is the key document here. It is being furnished, not filed in the strictest sense, meaning it is for information and doesn't immediately expose them to certain liabilities unless they specifically incorporate it elsewhere. But for us, it is the goldmine for understanding their recent performance. Now, while the filing itself doesn't contain the detailed financial tables in this specific 8 document, it points us directly to the earnings announcement. This announcement is where the numbers live. Based on the typical format of these announcements, we'd expect to see details on revenue, profits, earnings per S-share. And comparisons to previous periods, companies like KENNAMETAL typically report key financial figures that tell us how well they are selling their products and how much profit they are making. Wednesday be looking for things like revenue growth or decline and how that translates into actual dollars in their pocket or perhaps coming out of their pockets. For example, if they reported a significant increase in revenue, we'd want to know if that is due to selling more products, raising prices, or perhaps a combination of both. Conversely, a drop in revenue could signal tougher competition, economic slowdowns, or issues with their product line. And of course, we'd be scrutinizing their net income or profit. Is it growing? Is it shrinking? How does it compare to the revenue? A high revenue with low profit might mean they're struggling with costs, while a lower revenue with strong profit could indicate a very efficient operation or higher margin products. We also look at earnings per S-share, or EPs. This is a super important number for investors because it tells you how much profit is attributed to each share of stock. If EPS is going up, it is generally a good sign, suggesting the company is becoming more profitable on a per share basis. If it is going down, it could mean the opposite. Think about it this way, if KENNAMETAL, a company that makes industrial materials and components, has a great quarter, maybe their sales of specialized cutting tools to the automotive industry or aerospace jumped significantly. That would mean more factories are ordering their products, leading to higher revenue. If their costs for raw materials or manufacturing went down, their profit would also increase, leading to a better EPs. On the flip side, if there is a global economic slowdown, demand for industrial products might drop. Fewer factories would be ordering KENNAMETAL's tools, leading to lower revenue. If their main suppliers then increased prices, their costs would go up and their profit would shrink even further. These are the kinds of real world impacts these numbers represent. When we look at a report like this, we're trying to understand the story behind those numbers. Are they gaining market share? Are they innovating successfully? Or are they facing headwinds that could impact their future earnings? Finally, we see the signatures certifying the accuracy of this report. In this case, it is signed by John W. Witt, who holds the title of Vice President Finance and Corporate Controller. This signature adds a layer of official confirmation to the information presented. Now, looking at KENNAMETAL's overall financial health based on this filing. which essentially directs us to their latest earnings announcement. We need to see those specific numbers to give a definitive opinion. However, what this 8K filing tells us is that the company is actively communicating its quarterly financial performance to the public and regulators. The fact that they're filing this promptly and referencing an earnings announcement shows a commitment to transparency. The key for investors and analysts is to dissect that earnings announcement. We'd want to compare their reported figures to market expectations and to their own historical performance. For instance, if KENNAMETAL has a history of strong growth in their second fiscal quarter, but this year they show a disappointing performance, that would be a red flag. We'd be looking for any explanations they provide for deviations from trends or expectations, such as increased investment in research and development for future products, or perhaps a one-time charge that impacted their short-term profit. Are there any hidden risks? We'd scan the earnings announcement for any mentions of supply chain disruptions, rising raw material costs, increased competition, or changes in customer demand. These external factors can significantly impact a company's bottom line. Opportunities might include successful new product launches, expansion into new markets, or strategic acquisitions. So, in conclusion, this 8K filing itself is a procedural document flagging the release of important financial information. The real story, the definitive assessment of KENNAMETAL's direction, strengths, weaknesses, and future prospects, lies within the accompanying earnings announcement. Without dissecting those specific numbers, any opinion would be purely speculative, but the framework is here for us to do just that. Alright, that is our breakdown of what this KENNAMETAL filing signifies. What is your take on how companies release their financial updates, and what numbers do you always look for first? Drop your thoughts in the comments below. If this deep dive into corporate filings was valuable for you, please hit that like button, it really helps us out. And of course, subscribe for more straight to the point financial insights. Don't forget to join our Discord community for even more in-depth discussions. Link in the description. Thanks for watching, and we'll see you in the next decode.